Hello, everyone, and welcome to Three Valleys live corporate webinar. This is David Vidala from RBMG. Three Valley Copper is listed on the TSX Venture Exchange under the symbol TVC. Joining us today is the company's CEO, Michael Staresinic, and Joe Phillips, their CEO. We'll be going through Three Valleys November investor presentation, including an overview of current operations and upcoming milestones. At the end of the presentation, we will open it up for questions for management to address. If you are interested in asking a question and are logged onto the Zoom app or web platform, you can submit your questions to us directly in the chat module. Please note, this presentation is being recorded today, Tuesday, November 30th, and will soon be made available on the company's website. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. You can view Three Valleys' entire disclaimer on page 2 of their presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now I'll hand it off to Michael and Joe. Gentlemen, the stage is yours.
Great. Thank you, David, and thank you, RBMG, for organizing this event, and to all of you for joining us today. As mentioned, David, I am Michael Staresinic, CEO of Three Valley Copper. I'm joined today by Joe Phillips. He's our COO, our Chief Operating Officer at site and at the public company. And over the next 20 minutes or so, we'll take you through this unknown, underappreciated, undervalued investment opportunity called Three Valley. Thank you to David for taking us through the disclaimer. I do reiterate that forward-looking statements form part of this presentation, and I encourage each of you to become familiar with the risks of such forward-looking statements. Moving on to slide 3. Apologies, I got a sticky finger here on the mouse trigger. We are a pure play copper company located in Chile and producing copper cathodes of 99.99% purity, coupled with an unexplored land package of 46,000 hectares. I guess that's metric. So in Imperial, that's about 115,000 acres. And this is in a very good neighborhood. Joe will speak to that a little bit later on. Our infrastructure is fully built. We own 91.1% of the project here in Chile with a clear path to 100% and have strong partners in Anglo-American and Kaimura Capital that have committed to working with us. What makes us most unique is that we are 100% exposed to copper, nothing else. And we're already set to participate in the coming copper supercycle. We do not have a 10-year wait period to get from prospecting to producing. And I'll take you through some of that as we get through these slides. But what you will hear today is that Three Valley Copper offers a rare combination of cash flow, production, top-tier management, and exceptional exploration potential. We are executing a clear strategy that expands production and resources at Don Gabriel and Papamono, our two operating mines, while executing an exploration campaign on the remainder of this immense underexplored land package. To put this in perspective, and Joe will further elaborate, our near-term exploration plans are looking at 1% of our land holdings. That's about 2 square miles of our 175 square mile land package. And this focuses on the land that lies between our 2 deposits that I mentioned, both Don Gabriel and Papamono. And these are less than 2 miles apart. And there are 7 satellite deposits identified that additional work has to be performed on. They previously formed part of a preliminary economic assessment we completed in December 2018 that, together with Don Gabriel and Papamono deposits, provided a net present value of approximately US $425 million at $5 copper. Now at $4.50 copper, in and around where we are today, the Don Gabriel and Papamono deposits together generate approximately $300 million in US dollars of net present value, according to the sensitivity analysis in our technical report. Moving to slide 4, the board of directors are mining focused with complementing disciplines. I want to highlight a few. Terry, who's our chair, has sat on several mining company boards and currently is the director of Canaccord Genuity, a Canadian-based but generally international broker-dealer, mutual fund, investment banker type of idea, Martin Rea International, and Mineral Mountain Resources. Terry has a long, deep history in mining and also brings some unique perspective about copper from his director position with Martin Rea, one of the top auto parts producers in North America. In short, copper is critical to the future of the automotive industry. This is right from Terry's mouth. Simply put, the EV revolution is upon us, and copper has a front seat to its success. Now, Len is our audit committee chair. He's a retired partner of PwC, where he led the firm's mining industry practice in British Columbia. Len knows this industry and has and currently sits on several other mining boards. Lastly, I want to highlight David Smith. He's the CFO of Agnico Eagle, probably a well-known senior mining miner here to the audience. He brings another level of expertise to this company. Not is he just a respected CFO in the mining sector, but his underground engineering background, coupled with a deep IR experience, is a welcome skill set as we construct our underground mine. Moving on to the next slide, on slide 5. And this slide deck, just for your knowledge, it can be downloaded from our website. I forgot to mention that earlier, but our management and technical team is equally impressive, and they're outlined here. Joining me as CFO is Ian McNeely. He's a weathered mining executive with an entrepreneurial spirit. And Joe Phillips, who you will meet shortly on the call, is our CEO, has built, operated, commissioned, and constructed I think mining projects in 13 countries on 5 continents. He is perfect for our growing operation. Recently, we hired Dr. John Mortimer to lead our exploration efforts. John's another very great addition to our team. He's seasoned, spent a large portion of his career in Chile exploring for copper for BHP as their senior executive in charge of exploration, and is credited with discovering Escondida North. John loves the potential of this land package, and we are quite excited to have him lead in this effort. Together with Joe, their combined experience alone in exploring, constructing, and operating is a key asset of the project. And lastly, I want to highlight both Jarek and Luis Marino, arguably 2 of our top block caving experts in the world. Our Papamono deposit is to be mined using the incline block caving method, and we engaged both Jarek and Luis early and often for this development. With their oversight, input, and guidance, we are confident of its upcoming success. It's scheduled to start its operations in January of next year, so just a month away. And lastly, and overseeing the business is Luis Vega. Our site CEO has been with the project for nearly a decade and brings a deep history and continuity with the project. Moving on to the next slide and getting into more detail about this project. When we step back and look at Three Valley Copper, I frame it as having really 2 important differentiators. The first is the already built infrastructure. And I'll touch on this a little bit more on the next slide, but this is a Vale-built $250 million investment, and it allows us to capture these early innings of the copper supercycle immediately. There's nothing further we need to build to expand production. We're not waiting for permits. We're not waiting for infrastructure financing. We're not waiting for environmental or other regulatory or political approvals, community approvals, negotiations, anything like that. No waiting for 10 years, which is the time it typically takes now between exploring, permitting, building, and then finally getting production going. We actually are ready today, and we're producing today. And the catalyst to exploit this differentiator is our forecasted production from our nearly completed underground mine. Papamono is what we're striving to get to and ramp up during 2022. We currently operate at about 25% of our cathode production capacity, and that translates to higher unit costs. That's just a function of a fixed cost structure when you don't have the capacity going yet. But as we bring Papamono online in early 2022 and ramp up its production, its high grade and low operating costs will drive down unit costs. And by 2023, when we will be approaching full capacity, and at today's prices, could generate in excess of US $150 million in revenue in 23 alone. Our second differentiator is our land package, and only a fraction of this land package has been explored. We know that Vale, who are the previous owners of MTV, focused 97% of their drillings on the 2 known deposits. That's Don Gabriel for our open pit and Papamono underground construction project right now. They're 2 miles apart. That means how do I phrase, an inexplainable high percentage of this property has never been looked at. And our solution, our catalyst, as I refer to it as, is our first meaningful exploration program launched only a few months ago. We hired John to help us with this and believe he is the right guy from his many years working in Chile. He knows the country, he knows the commodity, he knows the people, he knows the geology, he knows the culture. This is a fantastic combination. He is currently on site and he's researching the grounds and advancing the drill program. Our intention is to drill between 6,000 and 8,000 meters and begin releasing preliminary results in the first half of next year. Turning to the next slide. I've already touched on a few of these points previously, but here's the timeline of MTV. And I'll put a few words around this slide, but get through it fairly quickly. Vale discovered Papamono and Don Gabriel in 2005, 2006. They then invested the infrastructure that resulted in its first production in 2011, 2012. It never got to full capacity. As mentioned, that's 250 million of infrastructure. And then they sold MTV. Why? Well, that's probably the most important question here. It's because in 2011, Vale took on a new CEO, and his first mandate was to change Vale's direction. He decided to focus more on iron ore and larger world-class deposits. Obviously, MTV is not an iron ore project. It's solely copper. And in every imaginable metric, MT was not yet a large world-class asset or deposit. It had just been built after immediately finding 2 deposits and no further exploration had begun. Vale sold it to a private family business in 2013 who did next to nothing with it until we purchased 70% of it from this family in 2017. During 2018 through 2020 under our ownership, we completed 3 technical studies and a technical report, brought Anglo American in as a debt partner and as the offtake provider, expanded the infrastructure to include salt leaching, and are now nearly done this construction of our underground mine. We have been pretty busy over the last 4 years setting the groundwork for a project to expand. And the catalyst and the most important, the most imminent part of our expansion is the completion of Papamono and its subsequent ramp up in production. First, our timeline for this is quite simple. It's laid out here at the bottom. First, we're going to complete construction by the end of 2021. I admit this may leak into the first part of January, but the plan is still to try to get there at the end of this year. Second, we're going to ramp up production in 2022, together between Don Gabriel and Papamono's ramp up. Third, we're going to attain peak production during 23 and 24. Those are our plans, and that's our expectation when this deposit comes online as mineable. And once Papamono is in production, we expect that this project will self-fund our exploration future initiatives. We're approximately 80% complete initial construction, but closer to the 90% point of completed construction before we can actually begin our first caving of ore. We have about 3.5 million left of initial construction capex remaining and are within 10% of budget. I'm just going to spend a second here on the concept of budget because I find it interesting depending who you talk to. Budgets for this type of construction usually include a 20 or 25% contingency because of its complexity. But what I'm sharing here is that the budget we measure against does not include a contingency. So saying this another way, we are within budget and only using 50% of our contingency reserve, which is, I compliment Joe and his team for doing this. This has been a complicated build, and we're a month away from initial construction being done. So I think he's done a fantastic job of keeping this within budget. Now, when ramp up is complete, our unit cost for mining ore from Papamono will be very, very compelling. On this slide, this is slide 10. The Papamono Massivo deposit is one of our 2 jewels and our primary focus for the remainder of this year, clearly, and into 2022. It is under construction. I've shared with you that it's expected to be completed no later than the early part of January of next year, and it's on budget. With an average grade, as you can see here, this is from our technical report, 1.5% copper. Papamono is expected to deliver about 102 million pounds of contained copper, while driving down cost to between $1.60 and $1.80 per pound. And that, because of this mining method, is less than half the cost of other available mining methods. The method that was chosen for this development is called the incline block caving method, an upfront capital-intensive project. Hence, it's taken us a year to get through it, but thereafter a very efficient and low-cost method of mining ore. The deposit is well-defined and well understood. We were very fortunate to inherit some of Vale's previous tunneling into the deposit, allowing for excellent follow-on work to support the conclusions that are stated in our technical report. This is the catalyst for Three Valley Copper's success, and this is where our primary focus is. For those not familiar with incline block caving, I actually direct you to YouTube, and you type that in, you're going to find some very interesting animations around that. And that's the type of mining method that we are undertaking here at Papamono. On our open pit, this is what is in production currently. This is Don Gabriel. It is our open pit and is currently producing, as mentioned. It's the proven and probable reserves are summarized here, also from our technical report that is accessible through our website and on Canadian's public disclosure network called CDAR. It is a manto-style deposit in the pit, as it can be seen in this graphic. You can see it's a series of shelves cut out of the side of a small mountain. It's not your typical open pit the way you would visualize it. We operate at about 3,000 feet, allowing for full year access and comfortable working conditions throughout all the seasons. Our plan with this deposit is to mine it until the end of 2022, leaking into 2023, where we will pause and then restart it a couple of years later. During this intermission phase, it is Papamono Massivo that will be the driver of our production. Don Gabriel at depth is also an exploration target that Joe will highlight in a few more slides. On this slide, number 12 illustrates our preliminary guidance that we provided to the market just last month. From our expected production in 2021, we are looking to double production in 22 and triple it in 23. So you can see how the ramp up of Papamono is going to impact our production profile. And this is really why we're driving hard at getting this completed and ramped up. Now, applying the $4 copper price to these production forecasts provides a strong cash flowing business. $4.50 copper for round numbers is about $10,000 a ton. And when we're doing 8,000 to 10,000 tons that we're expecting for next year, and then 13 to 16,000 hopefully in 2023, you can see how those numbers will really bleed out nicely. This next slide is actually a graphic created from the data that's in our technical report. The gray solid lines come directly from the technical report, and the orange hashed lines are extrapolations of the data. We distinguish the two only because when the technical report was published, it never contemplated a $4 copper price. At that time, it contemplated 30% plus and minus off 275. So you can see how these numbers just take off because we're so torqued to copper. Moving here to slide 14, and before passing the presentation over to Joe on the next slide, our second differentiator that I mentioned previously was our land holdings. The region is known for its copper abundance. Look at Chile is the #1 copper producer in the world. It's the #1 country for copper reserves. That is just a stated fact. It has a well-known rich history for producing copper. And there's significant mining activity at all levels around us in the region. We have and continue to use a number of tools for targeting future exploration and have already identified some interesting targets and areas for field checking from both satellite and remote sensing anomalies. Near mine exploration drilling commenced in September of this year, where we are testing for potential resource additions near our existing mining and processing plant infrastructure. Purposely, we're going to leverage that existing infrastructure. We have two deposits are 2 miles apart. It is an appealing strategy. We are also excited about the prospect of expanding our focus in the future to include the systematic exploration of our license area, where we know that numerous clusters of artisanal copper mining pits are a clear indication of prospective geology. We believe this land package has many secrets yet to be shared with us and look forward to sharing them with you in the future also. But as an example, our exploration team has already identified a new porphyry copper target on our license area only a couple months ago. At this time, I'd like to pass the presentation over to Joe to further elaborate on the exploration potential and plans for Three Valley Copper. Joe, fire away.
Thank you, Michael, and good afternoon to everyone. As Michael mentioned, we're in north central Chile. We're in a great neighborhood for looking for additional copper deposits. Some of the largest copper mines in the world are just immediately to our north. To our east, about 50 kilometers away, is the Pelambres mine of Antofagasta Minerals. And our property is along a very significant mineralizing trend that goes north and south through this area in the foothills of the Andes chain. Next slide, please. So the exploration project that we've just started about 3 months ago, we did an initial scoping study using advanced satellite imagery and a lot of exploration and geologic information that was available from the property over its more than 10 years of mining. Some of the tools that we used, in addition to imagery from satellites, has been using what's very, very useful to us are artisanal mining pits. We have a number of small miners who we allow under contract to come in and mine at a small scale off of our property. They basically open up the outcrop for us and give us, in addition to providing a steady supply of high-grade oxide ore to us, also have given us access to a lot of geologic information at outcrop along the trends and mineralized zones on our property. These small miners actually provide about 15 to 20,000 tons of ore per month to us that we currently process, in addition to being a useful source of information for exploration. Next, please. There's a fairly significant amount of geophysical surveys done, particularly in the area between our Papamono and Don Gabriel mines. You'll see copies of those images over on the right-hand panel here. We're using the results of those surveys as a guide. You'll notice one in the middle of those that looks like a partially closed donut, and you'll see a drill hole schedule for there. At the beginning of our program, we started drilling along some anomalies on the southeastern section of those. Those are where two of our largest third-party miners are, which have been mining high-grade oxide ore for several years. And we've been doing some drilling with the strategy of expanding along those identified outcrops. Next, please. Our Don Gabriel mine is quite interesting. It's a fairly large surface mining operation. It is scheduled to be mined actually through near the 2028 timeframe. We're currently mining medium grade sulfide ores from that pit. And you'll notice in this diagram at depth, there's an area that we call Don Gabriel Deep or Don Gabriel Veins. And from the color guide on the scale at the bottom, you'll see a lot of those intercepts in green, yellow, and red in color. We've got intercepts exceeding 3% copper. It's fairly wide space drilling right now, but it certainly has been sufficient to get our interest up. And we have at least one long deep hole planned for that to begin to measure the extent and of some open mineralization actually to the west. Next, please. As Michael alluded to, we also, through our satellite imagery, identified very interesting copper porphyry target. It's in an area where some small miners have been mining for a number of years. And the alteration, the phyllic alteration that we've identified around this is a good indicator of copper porphyry mineralization. Some very preliminary field work on it, and as of yet, continue to be quite interested in this as a potential target. And certainly, if we do find a significant porphyry in this area, it would be a game changer for us. Next, please. Just real quickly, an idea of our policies and programs in the environmental, social, and governance area. While we're not one of the largest mining companies in the Chile mining industry, I think we use our resources to get the maximum benefit from our relationship with the communities. We're fortunate enough to have our mine located with just about 20 kilometers away from the town of Salamanca, and many of our employees, a large percentage of our employees, and a large percentage of our smaller suppliers come from this area. Almost all of the third-party miners actually are based in the Salamanca area. So in addition to what would normally be a classical community relations program, we actually are business partners with a number of the members of the community, and that's really served us well. We have all of the company policies, procedures, and practices and ethical practices that one would expect to find for a company of our size. And we are in good standing with the government and all of the related agencies as far as permits for our operation. Michael?
Oops, sorry, was on mute. Thanks, Joe. I appreciate that. And one of the other things that I always like to comment on our ESG, COVID being a hot topic for far too many months, we initiated a vaccination program for all our direct employees and all our contracted employees and employees of contractors. We have about 700, approaching 700 plus or minus, depending on the month, individuals that are at mine site working. And we are at, I believe, 94% fully vaccinated individuals. 100% have already, nearly 100% have opted to get double vaccinated, which is great. And we've already started our booster shot program. So that is appreciated by the community, given that we are funding and helping this along and trying to keep the community as safe as possible, given the circumstances that we're in. So another small thing that we initiated that creates stronger ties with our community relations and those that work with us, for us, and that we work for. Onto the capital structure slide here on 21. Our market cap today is about Canadian $24 million. Now, we're a micro in the eyes of those in the US. After converting to USD, our enterprise value is approximately US $75 million. I'm not hiding behind this at all, but this is a company with a high level of debt. After our most recent financing, there's about 112 million shares outstanding. On a fully diluted basis, we get to 197 million shares. We last reported our cash balance just a couple days ago. Actually, yesterday morning, November 26th, was our cash balance of about US $18 million. So a very interesting metric here. If you try to line this up, our market cap in US dollars is in around 19 or $20 million, but we have 18 million of cash. Just to recap the story here, and then we'll pause and take questions. Hopefully that would be great. No, as you read through this last slide, I asked you to reflect on what really makes us different when looking at other pure play copper companies in the junior space. We believe, and I think there's a whole bunch of other people that believe wholeheartedly that we're in the first innings of the next copper super cycle. And clearly, I think we have a nice trajectory of a copper price coming to us in the next many years. And for all of those other companies that also believe this, and this is where I really take a position in, they're in the midst, those that are trying to grab this super cycle, they're in the midst of prospecting in years and possibly even a decade away from first production. We're ready today, and that's because of our infrastructure and because we're producing, because we have deposits, because we have property to explore. You know why? We have a Vale built infrastructure. A $250 million Ferrari that is yet to get out of second gear is really what this is. And that is one of our two differentiators and what could be the catalyst to exponential growth. Our second differentiator is our land package. Joe took you through this. It's also fully permitted. Our near-term exploration plans do not require any additional approvals. There's no additional environmental permits required, no local government sign off, no anything. We're drilling today. And as mentioned earlier, our focus is the following. First, we want to complete Papamono's underground construction by the end of this year. Second, ramp up its production during 2022. And third, attain peak production from Papamono during 23/24. And lastly, deliver preliminary exploration results in the first half of 2022. And once Papamono is in production, things should only accelerate as the company should be in a position to self-fund its exploration program going forward. That's an incredible statement to make, and that's what we're planning to get to. The project at today's copper prices has an after-tax IRR north of 1,000% and a market cap of US 20 million. And that's supported, as I mentioned, by 18 million of cash, 250 million of brand used infrastructure. You know, this feels like a compelling entry point. So at that point, I'm going to zip up. I'm going to call it quits here, take questions. And I do want to thank you very much for your time. Went above that 25 minute period that I intended to keep within. So I apologize for that. So thank you, David. Thank you, RBMG, for providing this opportunity.
Thank you, gentlemen. Thank you, Michael. Thank you, Joe. If you're interested in asking a question and are logged into the Zoom app or web platform, you can submit your question to us directly in the chat module. While we take a moment to develop that queue, we have also received a few questions prior to this event, and we'll address some of them now. Michael, Joe, are you ready to begin the Q&A portion of today's event?
Sure.
Okay. To someone that came in late, could you just elaborate on the ESG practices that Three Valley is undertaking?
Sure. We touched on a couple. Joe, I'll expand on a couple, then I'd ask you to probably elaborate. Some of the things that we didn't touch on, we're a smaller company and will not have the pocketbook or the ability to implement some of the ESG's policies that those of the big companies do. But we do them in unique ways. I mentioned how we've done our outreach on COVID. Knowing 95% are fully vaccinated, we've started a third booster program, third shot booster program. Almost 100% have put their hand up in order to get vaccinated. And this is important because somewhere in 70 to 80% of our suppliers and our employee workforce are in local communities. Nobody stays on site. So this isn't one of those mines where you fly to for 3 months or 6 months and then fly back out of. Every night, our employees go back to their homes and they sleep in their beds. So our interaction with the community from an ESG point of view is quite unique. And so we work with them. We bring them to site. We bring government officials. The mayor came not long ago to witness a blast. And I think Joe even offered him to press the button. It's hard to think boys and toys don't get excited about that. But these are the types of interactions we have. Our energy contract is actually from a renewable source. So we try to do what we can. We do have a low use of water. I'll let Joe expand on that, but that is something that's critical, especially in Chile with the drought conditions that have been on and off here over the last several years. Joe, do you want to add anything else to that? I've rambled on a few of them.
No, Michael, I think you did a good job. Water, which is a major issue, public issue, and political issue in many cases in some parts of Chile, has not been as significant for us. We actually, the result of our actions have developed additional water for agricultural users. So we're not seen as a challenge or a threat to the water. But in general, I think we have a proactive and a healthy program for a company our size.
Terrific. Thank you. Good answer. How do you foresee the infrastructure currently in place benefiting shareholders in the future?
I'll field that, Joe, and please add to it. we are very fortunate to have infrastructure in place and good infrastructure that has rarely been used when we purchased the project. Our exploration program right now is focused around our existing deposits. Just as a refresher, our two deposits, the one that's operating the open pit Don Gabriel, is only 2 miles away from Papamono, which is our underground deposit that we're constructing towards. 2 miles is not a very long distance when we're talking about a 175 square mile piece of property. So you can see the excitement from an exploration potential, but it also begs the question, and Joe talked about it, spoke to it in the exploration slides, that we are, dropping some drill holes in and around where two of our third-party miners, our two most productive third-party miners, have been mining oxide caps at the surface for years, not like for 6 months. This has been for a few years. And that is between the two deposits. So we are hopeful to be successful in this drilling campaign and exploration campaign that is, really focused in and around our deposits, because that allows us to utilize our existing infrastructure on a go-forward basis, not just with what we found, but what we may find going forward. And why that's great, it just means that there's no new infrastructure to build other than to mine out an open pit or do more drilling or develop another underground mine. So utilizing what you already have built is an excellent NPV decision. So that will translate to better cash flows for shareholders in the future if there is more copper to be found in and around our deposits, and that can be processed through our existing facilities.
Great. Could you comment on the recent financing that Three Valley just underwent?
Certainly. A couple things married up with that. We did, I'm going to reverse a little bit, maybe a month and a half ago, we had announced a strategic review process as part of our internal reviews. And during that strategic review process, we certainly piqued some curiosity with some investors, and our bankers and advisors came to us and suggested that there's capital available to raise and support the project to ensure we don't have any missteps with getting our construction of the underground done. And why I say that very particularly is that Chile is very, very competitive right now. There are contractors. We use contractors to operate and mine our open pit and under the construction process for underground right now, two distinct contractors. But they haven't had the demand of their services like they're having right now for many, many years. They are stretched thin. They often have committed to more projects than they can staff. And as soon as a contractor gets a sniff that you may be altering your plan, they're incentivized to transport and move people around from project to project. And that started to become somewhat of a discussion point. And we risked delaying and postponing, not by our choice, but by the contractor's choice, of Papamono getting complete. So that discussion required us to have capital in hand to ensure that we could finish on a timely and scheduled basis. And we actually decided to accelerate some of our CapEx in 2022 that was scheduled for 2023 and later years to help mitigate any possible operating hiccups that we may result in the ramp up of next year. So, all of that required capital. We had a financing opportunity here in November. December becomes a closed market to doing these types of things. So we had a very short time period to make a decision. We thought it was the best thing to do. Now, as part of this, which was really interesting, we had been having dialogue with our senior lenders. We're currently in a grace period with our senior lenders and all our debt for repayments, but they're supposed to start in March of 2022. Given some of the disruption we've had and underperformance we've had in our open pit during 2021, we've been short on cathode production, which has impacted future plans. Another reason why we did the financing. So we entered into conversations with our senior lenders to see if they would be open to realigning our repayment schedule to when we feel we're going to have the best probability of strong cash inflows. And as part of our financing, we were able to agree in advance with them to at least forbear, which is a social, essentially we've agreed verbally to delay and not make payments in March, June, and September of next year, which are the first three quarterly payments. And so we're going through working towards a definitive agreement and papering this up, but they've entered into a public undertaking that they will not call the loan if we miss those payments, as we work through hopefully a new and better aligned repayment schedule. So again, Anglo American and Kaimura as our debt partners are really partnering with us. They see the benefits of doing this. They see the cash flows available to them from these deposits and from the operations. Just sometimes ramp up and development of these things take longer than anticipated, which we had planned, a year or 2 years ago. So it's been an important financing for us. It gives us certainty to completing Papamono and advancing some of its capex and sustaining capex. And provides us a great negotiating foot as we continue through our strategic review.
Great. Thank you, Michael. We got one from the audience. Will the news regarding Capstone and the Mantos merger be a plus for you?
Yes, I think that was out today or yesterday. I can't recall which day it was. The days seem to blur into each other. I have to admit, my commute is about 14 steps from my bedroom, so one day looks a lot like the next. I think it's beneficial. The longer, 6-8 months ago, copper was a couple months or 3 months into the $4 plus US per pound range. We've now got the bulk of 2021 behind us, and it hasn't dipped below $4. The longer this stays at $4, the more the story as early innings of a copper super cycle really grab hold of more and more people and the investment community. So I think we're going to see more of this. I think we're going to see more mergers. I think we're going to see more takeouts. I think we're going to see more capital enter the copper space, and actually anything in the battery space or infrastructure space, the decarbonization space, the greening of the economy space. All that is coupled together here. So this no doubt has the markings of, I think, you're seeing, we're going to see more of these types of transactions when we may be one of them. The exploration potential is really a very appealing idea for those in the mid cap space for us.
I couldn't agree more. All right, we've got one last question. Operationally speaking, where do you see Three Valley in, say, 1 to 3 years from now?
Yeah, I'll be a little bit regurgitating here from the presentation, but then we'll go down a rabbit hole. We've laid out the next 2 years of what we expect to do. This year we're ending and hopefully to complete the initial construction here at Papamono. 2022 looks like is anticipated being the ramp up of Papamono. Ideally, we are going to double production from what we're going to do here in 2021. In 2023, we look to triple the production that we did in 2021. That is, that's the 1 to 3 year period. So I'm capturing 2 of the 3 years. Thereafterwards, I think is, really starting in 2023 as the cash flows build at these copper prices, exploration will be turned on to a whole nother level. We're mindful of our capital and available capital right now. So we are doing exploration, but it is on a smaller scale. But we hope to expand that over the back half of 2022 and certainly into 2023 when the cash flows are there and much stronger. So that's what I see for Three Valley Copper. My caveat on that, and thereafter, I mentioned the exploration. My caveat on that is I think the exploration piece will always be such a very attractive component to Three Valley Copper or Amenidades Valles MTV. Through a strategic review that we're ongoing right now, I don't know what the end will be on this. It has various things, including what we saw Capstone just do. That could be an avenue of our strategic review. It could be just a strategic partner that is a financial partner. It could be various other things. But what I'm fairly certain about is those that believe in copper believe in that supply and demand gap that is only going to increase. Look, supply hasn't been there. The last decade, there's been next to no investment. The grades are constantly depleting here and going down based on existing deposits that are operating right now. One of the stats I think I saw was, in order to fulfill the copper demand by 2030, so a decade from now, there has to be another 7 or 8 Escondidas mines built. Like we're talking the type and volume of copper available to meet that sort of demand. The supply's not there yet. So people are going to look at 115,000 acres. I think that's 175 square miles of land in a great jurisdiction, in a great region that has big copper mines operating around us, including Los Pelambres, Antofagasta next door to us, which is arguably one of the top 10 deposits in the world. They're going to look at our property and say, it hasn't had a lot of exploration, but with a little bit of work and a little bit of capital invested, there could be massive returns here. So, even if the strategic review ends up in something that is not what I, kind of painted here for the next 2 or 3 years, exploration will be a massive part of anyone's future look at this property.
I agree. All right. Well, thank you, gentlemen. And thank you to everyone that joined today's webinar. Today's webinar recording will soon be made available on Three Valleys website. If you have any additional questions that have not been addressed on this webinar, please feel free to email us at 3valley@rbmilestone.com. Again, that's 3valley@rbmilestone.com. And thank you again. You're now free to disconnect.